good numbers, Pankaj.
Management commentary always important. We got you some highlights of that, but we'll keep getting you on and off on that. Muthoot Capital Management declared their numbers earlier. Mr. Madhu, COO at the company, is now with us. So even though NII saw a growth of 15%, profit dropped. What led to the decline in profits?
Hello?
Yeah, so if you could just tell us about the numbers. NII grew 15%, but profits saw a decline.
Yeah, good afternoon. I think as far as our financials are concerned, we should look at from a couple of perspectives. We had a record disbursement, 2,135 crore. We have a record book now, 2,740 crore approximately. In Q4, we had, a couple of important transactions that we had done, securitization we had done, whereby about 7 crore profit, 7 crore income we couldn't book in Q4. It has to be, deferred to Q1. We had provided additionally, apart from RBI mandate, we had provided additional 4 crore for our NPAs. We had lined up a lot of banking limits, sanctions, for which there were a one-time processing fee that we had to pay. Besides, we had, got into a lot of marketing activities, advertisements in various national channels, which was additional cost for us. So there were a lot of factors which is related to our business growth, which is related to our business model, and of course the 7 crore deferment of the income, which actually led to the lower profit in Q4. But if you see yearly, the trajectory had been as per our guidance, as per our commitment. In all other parameters, I think we have delivered the numbers that were supposed to be done. Despite floods and Q3, Q4, and the headwinds in the two-wheeler industry, I think Muthoot Capital has delivered very good numbers.
Okay, you know what, Mr. Alexis, I'm just going to request you to hold on because we have corporate earnings pouring in. Let's once again go across to the Bandhan Bank management speaking on the numbers.
In Bandhan.
The management at Bandhan Bank, the stock is up 5% on the back of numbers. Muthoot Capital Management is still with us. So you were talking about the numbers, the disbursement. Let's start with disbursement once again. 21% QOQ growth, 2% YOY growth. You think the disbursement number will increase going ahead?
In fact, if you look at Muthoot Capital and larger group, Muthoot Papachan Group, we are blessed with having about 3,500 branches across the country, which is Muthoot FinCorp Limited, which also sources business for us. So given the industry strain that had been there in the two-wheeler, what we have seen in Q3, Q4, we are pretty confident that given our distribution network that is there through our branches, and we have kind of expanded into northeast and western part, which we aggressively would be growing. We are very confident that the numbers that we are saying we would be able to deliver. The CAGR for Muthoot Capital in terms of disbursement was about 25% for last 3 years. Industry grew by about 10%. So we've been telling that we'll grow double the industry, and today we are about 2.6%, 2.6 times the industry growth. So the trajectory that we have said during our QIP in 2017, that we'll double the book by 2020, we are very much there. The guidance is there that we should be able to deliver that around 3,500, approximately 3,500 crore of book is something which we'll deliver in 2020.
Okay, so that guidance stays when it comes to the size of the book by 2020. Let's talk about the performance in the two-wheeler and three-wheeler book, because as we know, over there in the monthly auto sale numbers, month after month, it indicates a slowdown. So how is your own book doing over there?
As I said that we are blessed with the 3,500 branch network that is there from our parent company. Besides that, you should look at from the perspective that the industry is slowed down because of the couple of price increase that has happened for two-wheelers, like mandatory 5 years insurance, and then after that few more regulation in terms of ABS, and then next year there would be further increase in escalation in the cost. The financing percentage of total sales in the country is about 36-37%, which is likely to go up because the prices are going up. So we believe that the financing portion of the overall sales is going to go up, and that is the opportunity that we have. We had been witnessing that in terms of our penetration in the rural markets, like we are more predominantly in tier 3, tier 4 centers. The trend of moving from scooters to motorcycles and the growth coming from rural sectors, all these are contributing to our growth. So given the industry and our capability to really tap where the growth is, we are in a really sweet spot, I would say. And we have seen that, in terms of our two-wheeler disbursement, we had been consistent. Our business model is different from the industry, different from other NBFCs, which is helping us. So we are really not worried about how the industry performs because our business model is really different, and we'll be able to tap through wherever the opportunity is.
All right. Madhu, let's also talk about your NIMs. What was your net interest margin during the current quarter? And also, given the entire rising funding cost environment, do you think that perhaps margins could be impacted going forward?
We are not, as of now, we are not worried about how NIMs is going to get impacted because partially it is passed on to the customer, the cost in terms of cost of funds. We are at about 10.1%. We expect it to be about plus minus 20 BPS up or down as we go forward. We had been able to do a lot of cross-sell initiatives. We are planning to launch a couple of new products which would actually help us scale up our NIM. We would be able to manage it across. Importantly, in terms of our reach, because we have a distribution network which is about 3,500 branches, the way we can leverage our distribution, that we don't have additional distribution cost. So if you look at our OPEX, in fact our OPEX to NII has shown a better percentage compared to last year. So one of the reasons how we've been able to leverage our distribution and grow our business despite showing about 25% CAGR growth, our OPEX had remained constant. One of the reason why the leverage of distribution network is helping us. So we are confident of maintaining our NIMs. Cost of funds is a matter of worry, but we are not really worried that it would kind of impact our NIMs.
Right, sir. Thank you so much, sir, for taking up.
Thank you.
Thank you so much, sir, for taking out time for us. That was two management back-to-back, Bandhan as well as Muthoot Capital on their numbers. In fact, let's listen to the management or Mr.